Like the vast majority of small cap stocks, INEO, listed under ticker symbol INEO on the TSX Venture Exchange, has had a rough road over the past little while. But investors willing to put aside the noise and look at the facts are discovering a company that is on the move. In fact, the company's fourth quarter 2023 results, reported in late October, reveal a top line that grew by 21%. The company has expanded its welcoming system network to 23 states across the U.S., with plans for additional rollout deployments in 2024 and 2025 already in progress. We catch up with CEO Kyle Hall to talk about the year to come. Glad you're back, Kyle. How are you?
Doing great, Richard. Thank you.
Kyle, like many small caps, it's been a tough year for INEO, but the share price may be masking progress. Your 2023 results, reported in late October, showed a 21% increase in revenue. Can you talk about what's driving that?
Yeah, we've we had like most micro caps, the share price has struggled with the overall market, but we've been making good progress behind the scenes, and our revenue is being driven by our real focus on the advertising and also the rollout of our customers, right? So we've got this very large U.S. customer that we're rolling out. The store counts are getting up there. We're hitting critical mass on it. Advertisers starting to come on board, and we haven't reported our Q2 yet, which is our December quarter, but it's shaping up to be one of the best in the company's history. So lots of good drivers behind it, mostly because the number of stores that our systems are deployed in is like I say, reaching critical mass, and the advertisers are coming on board.
Do you now have more visibility on what type of retailers will become early adopters of this welcoming system?
Yeah, I think people that follow us for a while know that we started with this liquor store network in Canada. That was our proving grounds, testing grounds. So that was the basis of it. But our largest customer now is the largest U.S. office supply superstore in the U.S. Rolling them out. We've got this massive grocery chain in Colombia, which we will double the number of stores with this year. But we also have test systems, pilot systems in with a large pharmacy chain in the U.S., a large home improvement chain, a sporting goods chain. So it's kind of the whole gamut of retailers that have good traffic in their stores. They need loss prevention at the front entrance, but they're realizing that they can monetize that traffic with digital display screens in the stores. And that's really what we're doing. We're leveraging that loss prevention system at the front of the store to get more screens in the stores, and then getting the exclusive contract for advertising on digital screens within the store.
Yeah, it's such a unique system you offer. You recently completed a small financing. Do you have the cash to execute on your plan? And if interest rates fall, are you going to consider a debt refinancing, Kyle?
We've really tried to protect our shareholders, and us as management, we're large shareholders too. And so we've really tried not to raise money at these prices that the stock's been at. We need to get the value shown in what we've been doing, reflecting the stock price. That will happen over time. Of course, we'll love it to happen sooner than later. The overall market's going to help. But yeah, the financing we just had, we raised money in 2022, early 2022. We went all through 2023 without raising any. We're doing this small round right now just to give us the capital to deploy all the systems with our office superstore in the U.S. That the cash flows are picking up, and we should be able to fund the rest of it out of cash flow. So we're really hoping not to have to raise any more money after this. And your point on the debt is a good one. As interest rates come down a little bit, debt might make more interest for us to pull some of our working capital in that way.
Good stuff. Yeah, it sure looks like we could see some interest rate relief. But, here we are, new year. Kyle, what milestones are you looking to achieve in 2024?
Yeah, the big thing is store count, because without more stores, growth doesn't happen. So driving that store count, adding new retailers into there. And then the third is really is around the advertising. We announced in December that we hired Salim Thorani to run our new retail media group, our pure focus division that's all about selling advertising. We were partnering with other companies with it. We were giving them large percentages of it. We had other programmatic players in there, but we decided we're going to hire some expert professionals in this area, grow that side of the business. And so the momentum we're driving there is what's really, I think that will pervade through into the stock price. It's going to hit the revenue numbers, it's going to hit the stock price, and we're going to be I think, seen in the market now. We've been kind of hidden, right? This unknown story out there. But now that we're really projecting what we're doing on the advertising side, people will see that more. We created a new website around called INEO Retail Media. I asked people to go check that out. You can really see who our customer sets are there and who we're driving forward with.
Lots on the go with INEO, and it's truly unique advertising options that it provides. It's ticker INEO on the TSX Venture. Kyle, great to catch up. Thanks for doing this.
Thank you. Thanks for having me here, Richard.